In this video, we're going to define accounting and discuss some of the history of accounting. So, accounting is a system of recording and summarizing business and financial transactions. When we have an exchange of resources, we need to record what is being exchanged. And so, for as long as civilizations have been engaging in this exchange and trade, and as long as organized systems of government have been in existence, there have been methods of record keeping and accounting tools in use. So let's start with the ancient civilizations and how they used accounting. We actually know now that accounting is one of the key drivers in the development of writing in human civilization. Right? Historians believe that accounting was the first type of record keeping that required the use of symbols or characters that represented numerical values, which then eventually evolved into writing itself. If you think about it, we didn't really need A, B, C, D, E like we do today, but we did need 1, 2, 3, 4. Right? We needed something to denote digits, and we used this 10-digit system because we have 10 fingers. We started creating symbols that represented what we could previously do on our hands because we needed to be able to transfer that information from one person to another. Some of the earliest known writings that have been discovered by archaeologists are actually accounts of ancient tax records on clay tablets from Egypt and Mesopotamia, dating back as early as 3300 to 2000 BCE, so like 4,000 to 5,000 years ago. In these ancient civilizations such as Sumer and Egypt, accounting was used to keep track of economic transactions, trade, taxes, wages to employees. These transactions were recorded on clay tablets, and that was used for centuries. Now, as trade and commerce increased, so did the need for more efficient methods of record keeping. And so this then led to the development of cuneiform script in Sumer. That was, again, one of the earliest known forms of writing. So it's kind of fascinating that accounting led to the system of writing. And in fact, cuneiform script was initially solely used for accounting purposes because it provided a way to record financial transactions in a standardized and organized way. It was only later that it was used for other forms of communication like letters and literature. Similarly, in ancient Egypt, hieroglyphics were first used for accounting and then later evolved into a form of writing for other purposes. So I'm going to show a picture of a clay tablet, and this clay tablet has been translated to say 29,086 measures of barley, 37 months, signed by Kushim. Now that makes Kushim the first individual in recorded history whose name is known to us. Kushim was an accountant. Now, fast forward 2,000 to 3,000 years, and you'll find accounting in all the major civilizations of antiquity. In ancient Greece, accounting was used to keep track of tax payments. Citizens were required to submit annual tax returns that included a detailed account of their financial activities, and that information was recorded on clay tablets and stored in the public archives. In ancient Rome, accountants were used to manage the finances of large estates and businesses. Accountants were known as tabulari, and they were responsible for keeping track of financial transactions. They prepared these financial statements, and they made sure that taxes were paid on time. The Roman legal system also included laws that governed the behavior of accountants and bankers, and it established penalties for fraud and embezzlement. And we still have laws like that in existence today. In ancient China, accounting was used to manage the finances of the imperial government. The accountants are responsible for keeping track of tax revenues, expenditures, and salaries of government officials. In ancient India, accounting was used to manage the finances of temples and religious institutions, and they were responsible for keeping track of donations, expenditures, and the assets of the temple. So accounting has really been a fundamental part of human civilization for thousands of years, and it has been used in a variety of contexts for a variety of purposes. I think it's really cool to just study it a little bit and kind of give you the background, because You think accounting is just math, but there's so much more to it. Fast forward to the Renaissance period, right? Beginning in the late Middle Ages, continuing into the Renaissance, many European countries were shifting away from a barter-based economy, bartering where goods and services were traded directly for other goods and services. We switched from that to a monetary economy where money was used as the medium of exchange. You have this rise of international trade with the Silk Road, the growth of banking institutions, the development of double entry accounting, right? These were all critical factors that helped to facilitate this transition toward a monetary economy. And as European nations began to engage in more trade with one another, they needed this common medium of exchange. They used precious metals like gold and silver as currency. And these materials were widely accepted. They had inherent value. This wasn't as simple as today, where it's just like paper and paper is worth what we say it's worth, right? Everything was backed by gold and silver. That was the inherent value. And so every civilization, every society, every country valued those materials. And so they were used as a medium of exchange. Now, banks also emerged in this period in the Italian city-states like Florence and Venice. During the 14th and 15th centuries, these banks provided a safe place for people to store their money, and that allowed facilitating the exchange of currency even further. The development of these banking institutions helped to standardize the use of money as this medium of exchange, and it made it easier for people to conduct business across long distances as trade and commerce continued to grow. Now, amidst all this, right, amidst all this growth, this international trade, this use of silver and gold, now business people need a way to keep track of all these financial transactions. How do we know if we're making any money? How do we know if this is good for us? How do we know if we're winning? So to solve these issues, Italian merchants developed what we call double entry accounting, and that is still to this day the standard practice in modern day accounting. We use today double entry accounting. We're talking about that in the next module. Double entry accounting allowed businesses to accurately track their income, their expenses, their profits, and it facilitated this rapid growth of trade and commerce during the Renaissance. In addition, we also saw the first auditing techniques at this time. In the 16th century, the Venetian Republic established the first formal system of government auditing, which was designed to prevent fraud and abuse of public funds. Now, I want to talk about one really important figure in this time frame. The first known published book on double entry accounting was written in 1494 by Luca Pacioli. He was an Italian mathematician and a Franciscan friar. He was born in 1445 in Tuscany, and Pacioli is known today as the father of accounting and bookkeeping. He wrote, and I might butcher this, he wrote the Summa de Arithmetica, Geometria, Proportioni e Proporzionalità. If I said that right. In English, that's the collected knowledge of arithmetic, geometry, proportion, and proportionality. And he wrote this in 1494. Now, all of that sounds like math, right? Okay, it is math. But in this book, he included a 27-page treatise on bookkeeping, on double entry accounting. It was this extra little chapter in this book of math and geometry and proportions and arithmetic. Here's this chapter on bookkeeping. And this whole textbook was written for merchants, right? It was designed for merchants, and so that was part of what they needed to know. Now, his book was the first one published. There was others written before it. He did not invent any of this necessarily, but he is credited for it because of the invention of the Gutenberg press. The Gutenberg press allowed his book to be printed in mass and distributed to the sons of the merchants of Venice and Florence and all these Italian city-states and all throughout Europe. And he actually wrote it in the vernacular as well, the vernacular Italian, which was uncommon for that time. And so all of these things coming together allowed this book to be disseminated widely. So Pacioli is credited as popularizing amongst the merchant class of Europe the accounting that we use today. Now, that book then became the reference text and the teaching tool on this subject for the next several hundred years. It educated readers about the use of journals and ledgers, about accounting for assets and receivables, inventories, liabilities, capital, income, and expenses, keeping a balance sheet, keeping an income statement. It had all of the things that you're going to learn in this class. That's how far back this knowledge goes. Now, some cool little thing about Pacioli too, just to give you some context, he was actually invited to teach mathematics at the court of Duke Lodovico Maria Sforza in Milan. And it was there that the artist and inventor Leonardo da Vinci was actually one of Pacioli's students. Pacioli and da Vinci actually became really close friends, maybe more than that. And da Vinci illustrated Pacioli's manuscript called on the De Divina Proportione, of divine proportion. Beautiful, beautiful illustrations in this book. I'll see if I can show them on the screen here. And Pacioli actually then taught da Vinci the mathematics of perspective and proportionality that he would then go on to use in his famous masterpieces. So, cool bit of history there for you if you guys like history. All right. Let's keep moving into the future. Now, in the 19th and 20th centuries, you have this industrial revolution happening, right? Companies, mega companies in their day are starting to form, and the accounting profession is beginning to develop into really a distinct and recognized field, right? Trade and commerce are expanding. Different regions and companies are beginning to develop their own accounting standards. And the demand for reliable accounting starts to become really important. And the profession then rapidly became an integral part of the business and financial system, right? Many organizations were formed in this period to promote the development and standardization of accounting practices, as well as to establish ethical guidelines and professional standards for accountants. The first of these organizations was in Scotland in 1854, and then shortly after, the American Institute of Certified Public Accountants, founded in 1887, which is still today one of the most influential accounting organizations in the world. Other notable professional accounting organizations include the International Federation of Accountants, which was founded in 1977, representing the global accounting profession, and the Institute of Management Accountants, founded in 1919, that focuses on the education of management accounting. Now, these organizations have played a really critical role in advancing the accounting profession and establishing it as a respected and essential field of business and finance. And so they have helped to establish and enforce standards and ethical guidelines, and they're really critical in maintaining public trust and confidence in the accounting profession. So let's talk about accounting standards a little bit. Countries started to adopt accounting standards in like the mid 20th century. It's really a more modern phenomenon. And most countries up until that point really relied on like the British or the American accounting standards. But as economies became more globally integrated after World War II, right, countries began to see the need to develop their own accounting standards to better reflect their unique economic, legal, cultural environments. One of the earliest adopters of a national accounting standard system was Germany, and they introduced the HGB Handelsgesetz. I'm German by lineage, but I don't know how to say it. The HGB was introduced in 1897, and it was one of the first comprehensive accounting standards in the world, and it became the model for other countries looking to develop their own standards. And the importance of these standards is so that if I'm looking at financials of one business and another business and I want to compare the two, I know that the techniques and the tools of accountants that were gone into preparing these two documents are the same techniques and standards. That's why this is so important. Now, after World War II, again, there was this push towards globalization and greater harmonization of accounting standards across Europe in order to facilitate trade and investment. The European Union was created in 1957, and one of its early priorities was to develop a common set of accounting standards. In 1973, the EU adopted what's called the Fourth Directive on Company Law, which required all member states to adopt a set of accounting standards based on the IAS, International Accounting Standards. Now, back in the States, the Securities Exchange Commission was established in 1934 in response to the 1929 stock market crash, and the SEC has the authority to set accounting standards for publicly traded companies. The SEC has historically relied on what we call generally accepted accounting principles, or GAAP. And that system was developed by the American Institute of Certified Public Accountants, and we still use it today. It's very important. We're going to talk a lot more about GAAP. Today, most countries, they still have their own national accounting standards. There's some significant variation in the content and format of these, but in 2001, big steps were made in standardizing all of these. The International Accounting Standards Board, the IASB, was established to promote the development and adoption of a single set of high-quality global accounting standards. And so what they have created, this is important, they have created the International Financial Reporting Standards, IFRS. Now, you're not going to need to know much about IFRS for this class, but in your future accounting classes, especially if you go to Marshall, it's going to be important to understand IFRS. And IFRS is the international version of GAAP. We want them to be very similar to help facilitate global trade. They're not identical, but they're pretty close. 140 countries, including the European Union, Australia, and Canada, use IFRS. United States, we use GAAP. We're the only country that uses GAAP, right? That's our system. 140 countries use IFRS. So you can see how important that is. Okay. Last bit of thing that we need to talk about is technology. Technological innovation has been crucial in the role of accounting over the years. And historically, accounting was largely manual. It was paper-based with ledgers and journals and other documents, and everything was recorded by hand. Well, during the 19th century, we had new technologies like the telegraph and the typewriter. All of that made it easier to communicate and record financial information. The use of mechanical calculators became widespread. And now with the advent of computers and other digital technologies, accounting has become increasingly automated and streamlined. In the 1980s, we saw the introduction of spreadsheet applications like Lotus 1-2-3 and Microsoft Excel, right? And that allowed accountants to automate many of their calculations and quickly generate financial statements. We're going to use Excel a lot in this class. It is the Swiss Army knife of software, and accountants use it all the damn time. Now, in the 90s, we saw accounting software packages like QuickBooks and Peachtree, and that has allowed smaller businesses to manage their finances more easily. These software packages provide a range of features like accounts payable, accounts receivable management, inventory tracking, budgeting, even payroll. The rise of the internet in the late 90s and early 2000s continued to change the accounting industry. Now we have online accounting software. It's cloud-based. And at the time, like Xero and Wave were popular. Now QuickBooks Online is a big player. It allows businesses to access their financial information from anywhere with an internet connection. Everything is stored on a remote server somewhere, and you just access that remote server through a web browser. Today, like right now, the accounting industry is in the midst of yet another major technological revolution between artificial intelligence, machine learning, blockchain technology. All of that is significantly impacting the accounting industry right now. AI and machine learning have the potential to automate repetitive and time-consuming tasks like data entry, reconciliations, and financial statements. They can also improve fraud detection. They can help reduce errors. They can hopefully increase the accuracy of financial reporting. They can also generate insights from data that would have been impossible for humans to uncover, which enables organizations to hopefully make more informed decisions. You have to think, we're in the realm of big data. Well, AI can consume data right? You and I, we are limited in what we can concentrate on and what we can consume. AI is virtually unlimited, and through machine learning, it's able to consume massive amounts of information and then give you insights on that. Now, we're also seeing blockchain technology come about, and that has the potential to revolutionize the way transactions are recorded and reported. And just so you know, blockchain is what cryptocurrency is founded upon, right? It provides a decentralized ledger. That's the key to blockchain. It's a decentralized ledger, and all that basically means is when transactions take place over the internet, lots of little computers all across the earth are keeping track of those transactions. Not just one computer, but lots of different computers are keeping track of that transaction. And when they do so, right, they usually get some kind of a token, which is a cryptocurrency. Like they get some kind of a token as a reward for, hey, thanks for letting us use your processing power to do this work. Kind of a weird thing. I can't explain it very well, but it can eliminate the need for intermediaries. It can help reduce cost and increase transparency because of the decentralized nature. It can also hopefully improve the security and the accuracy of our transactions. In the accounting industry in particular, it's really useful for auditing and tracking transactions because it's all out there. It's public, right? If I want to know where this company bought these materials from, I can find that if they used cryptocurrency to pay for that. It's on the blockchain. Like there's some level of anonymity, but it's still the promise of that technology is that it is transparent. So overall, the adoption of information technology in the accounting industry has been significant. It has led to increased efficiency and accuracy and accessibility of financial information for businesses and for their accountants. But it's important to note that these technologies, they also present challenges and ethical considerations, particularly with regards to things like data privacy and cybersecurity. There's a whole lot to be concerned about as well. That's going to wrap up this video. I'm going to stop here and you should go on to the next one where I talk about career opportunities in accounting.